Hello, hello, and let's look at a hot penny stock BBIG. What happened today? So here on September 9th, we had a we had that shooting star yesterday. I mentioned that, which pushed the price down, but something liked it at this price and pushed it back up. So we're now entering a nice support zone right in this area. We need a few more candlesticks to stay right in line here, and that will form a nice support and then moving on. Now look that the 10 EMA is ever so nicely climbing up. We are entering the turnaround zone on the high end, which is above 90. And how much of a pullback could come back? It all really depends on the markets. There's not much we can do about it, but be prepared. The most important thing about trading, and a lesson, is know your exit before you enter the trade. And we look at my past videos, and I'll be using the 3-to-1 ratio. I mean, right here. Now, this is where the scanner would have picked it up had we been here looking for under 10 value stock. This was running this closed at, let me go ahead and bring in our trusty dialog box. The high was 304, and then penny stocks call it 305. Would have triggered here the next day. It opened at 307. You would have got triggered there. Your stop would have been the swing low, which is the 216 minus 1, makes it 215. And then up pops the weasel, and away it goes. Look at this. It hit the first ratio, second ratio, and third. What is this ratio for those who are new to the channel? That means we are willing to risk 1 unit to make 3. And in this case, had we done and said, okay, we take profit at above 588, we would have been stopped out. Yes, we would hit 597. Right over here, look at the word high, right there, high. And I put the cursor back on that candle, we would have got stopped out with a 3-to-1. Done. More risk takers, they would have gone with two other types of exits. One would have been last bar low, which would have been this last bar low, and get stopped out here. It would have opened here and dropped out and got stopped out here, still producing a profit. It almost was 4-to-1 right there. There's 4-to-1, risking 1 unit to make 4. So it didn't. Another exit would have been the high 1, high 2. When high 1 is cut by high 2, the lowest point of the 3 candle or better system is the low. Lowest point becomes now the new stop. And then it goes back here, and then now we have a new stop. We had this pullback here, and then if we hit the next candle forms and stays above that low, then that becomes the new stop, and that is a I'm tired. I apologize. It's been a long day at this conference. It's confirmed dipper low. There's dipper low and confirmed dipper low. The dipper low would be is comes down, that's the low here, but it doesn't break the high on the left. Then that's not a confirmed dipper low, but day traders do buy the dip. That's called buying the dip. And then the confirm is you wait for a price to close the high, and then you would enter on the open of the next candle or above that point. And then there's also that you don't wait for the close, you don't wait for the break of the high. It just formed an upper candle where the low is not lower than the center candle. So those are your 3 types of dipper low tradings. So we're going to be following this through to see where it goes. And it's a nice attractive stock at 1250. The institutions are watching it, and they look here. When it got past the $5 mark, now those who sold out here, again, they're looking at the 3-to-1 ratio. They look at these ratios and say, hey, that's good profit, let's grab it, because they got to send the pensioners those pension checks at the end of the month. Well, there isn't much more here on BGI. And with that, we'll conclude tonight's report on BBIG. And we'll see what happens tomorrow. And I thank you very much for stopping by and checking it out. Do leave me a comment. And if you like what you like, give me a like. I appreciate it. Thank you. Bye-bye.